All right, we're ready to go. All right, so this is the weekly Outlook meeting here. And we've got a lot of regulars here looking for some new people, but we'll see what happens. So this is a disclaimer, not going to read it, but there it is. So be aware of that. Okay. So it's time for a new strategy. We need a paradigm shift. What is a paradigm shift? A paradigm shift is an important change that happens when the usual way of thinking about or doing something, here's the key word, is replaced by a new and different way. So what happens to a lot of traders? They come over, they hang around with us for a while, they go, oh man, I'm just going to start using that ATR. Well, here's what you've done. You've complicated the situation because you have a losing strategy that you added another wrinkle to. That's what happened. And now you're not even successful doing that. So what happens is it's got to be a new and different way. And that's where people miss it. I'm just going to add this. I'm just going to add this. This is how you got into the boat you're in because you read about something on Forex Factory and you added it in and you added it in and now you can't trade. All right. So just a heads up, you got to have a paradigm shift, which means I divorce myself from all that stuff. I tether get rid of the tether to my indicators and all that, and I start from scratch. All right. So we never go into the charts looking for a trade. We go looking for market structure and then finding the wide open space based on that market structure to see if we even have an opportunity. Now, if you don't know the structure, the real estate of the day, the stop and the potential limit, you're not trading. You're a gambler. That's what you are. So to make it in the Forex, you must press your winners without exception. Without exception means exactly that. You never don't do it. All right. This is also the problem with people coming over and I'm just gonna start pressing my winners. I'm trading this moving average crossover and just gonna start pressing my winners. It's a losing strategy to start with, and you've now complicated it. All right. So personal trading consistency comes when a trader consistently trades only when the trade setup that they can consistently do is consistently happening in the charts. And that's why we tell you in the beginning, major in pull trades, which is the rectangle, and pullbacks in the beginning so you can earn while you learn. It takes 100 hours to become a world-class trader in pull trades. It takes 100 hours to become a world-class trader in pullbacks. Now you can earn while you learn. Yes, there's lots of stuff, but you don't have to learn all that right off the bat. All right. So you can break the rules and you can get away with it, but eventually the rules will break you for not respecting them. So the magic numbers for success are a 65% win ratio and a 35 plus pip average pip capture. Now, let's talk about that for a second. A 65% win ratio means that out of 100 trades, you lose 35. Let's hope we don't lose 35 in a row right from the start because we're out of a game if we do that. But you are going to lose 35 out of 100 trades, all right? A great trader might trade at 72, 75%. A great trader, all right? A bank trader has to trade at 65, all right? Or they lose their job. Now, why can they do that? Because their average pip capture is well over 35 plus pips. Because if you don't have a 35 plus pip average pip capture, your losses will overcome your wins. All right. So you've got to learn to press your winners without exception. It's the key to being successful in the Forex. Trade only micros till you get these stats, So, nobody wants to trade micros, okay? But I understand that because you don't make a lot of money. But you're not here to learn to make money. You're here to learn to make pips. If you can learn to make pips, the money will come. I had a fast tracker a year ago, and the day we started the fire hose, he said, "Guess what, Scott? You never believe it. You know that $2,500 that I lost, last week? I got it all back last night." Now, could he do $2,500 trading micros? No. So he's breaking the rules, but he wins. So now he's got the potential for a bad habit developing. So the first thing we're going to do is going to review the alerts that I've already sent out. So let me go get that up here for you. And where are you? Here we go. wait a second. Hold on. All right, here's the charts. Let me pull up the IC. All right, so every night, every day at 5 o'clock at the New York Fix, I sit down in front of my computer, no matter where I'm at, and I got to go to these alerts. All right, so let me go to the alerts, and here we go, alerts. All right, so first thing I do is I tell you what I think the dollar index is doing. All right, so let me see what day, 502. Okay, so here's what I said. I got the dollar index up. I have it up, but it may have topped out. If it reverses, replot the targets, okay? So we'll pull the dollar index up here, and you can see that we have topped out, possibly. We're down, and we got a flag pattern to the downside, all right? Let's look at the clues here, all right? A flag pattern for continuation down. What does MACD tell you? We're probably going down. Right now, when I did this, 2, 3, 4 hours ago, there was 4 less candles here. All right, so it didn't look like this at all. All right, so what is your opinion? All right, is it going down or is it going up? It's just an opinion. It's not something you bank on. Up or down? What do you think? What does the chart tell you? Thank you, Peter. Peter's on track. Down. Okay. So the currency is telling us look for the down. What's the key here? MACD. MACD points the way. Now, what confirms that MACD is that a flag pattern up there, which is the rectangle, that says, yes, we're trying to continue to the downside. All right. So that means that this is wrong. All right. Now, it wasn't wrong 4 hours ago, but it's changed. All right. So we'll see what it shows up here, all right? So first one I sent out was the pound yen. I had it as a sell. Let's go look at the sell. Now, why would I have this as a sell? Well, I've come down here and I got a flag pattern to the downside. I'm not near any bottom right now, all right? But MACD has given me almost no hints whatsoever that it's going down. So the only thing here I got that says we're going down is the flag pattern, all right? That's all I got, all right? So, it's inconclusive evidence, all right? So I put the ATR on here. Based on that, the ATR is at 185.02. Let's call it 185, all right? Which is what I did here, all right? So I've got the trade in here as entry price is at 186.30, which is right in here, right there. We're at 34 right now. For that trade right there, the limit price is at 185, which is just 2 pips below this, all right? Does anybody have any questions on that one? Now remember, if the dollar goes down, this is not going down. All right. The pound yen is correlated against the dollar. All right. So if it goes down, this is not going down. And that you as a trader need to know that. Why? All right. Thank you, Chris. I'm at 10. No wonder. Okay, let me go up here to 10. Here we go. All right. So here we are at the MACD, and the MACD says you are below the 0 line, but you have upside potential right here that may be moving up. All right. So there you go. So this currency could go either way. All right. So how would I trade this currency? You have the opportunity right here to the downside. How would I trade that? I would put an entry order in on the break of the rectangle. The second trade would be the break of the 618 for the target down here. Does everybody see it? Everybody see it? Now, will it happen? I don't know. But that's trade 1. That's trade 2 right there. All right. Thanks, Chris. All right. Any questions now? I got a down channel. I'm below the MACD 0 line break. I got a pull to the downside. All right. What does that tell you? They think has nowhere to go up. Yeah. And they think that the dollar is going to bounce and go up. That's what they think. All right. Don't forget, here's what a lot of traders miss. So pay attention here. The traders at the bank are the same people every day in every session. They don't change. All right. So we're in the Asian session. All the people who normally trade the pound yen are here. They're live in front of their computer, right? They act as a herd. Herd mentality is what it's called, right? They have structured themselves, regardless of the dollar, to go to the downside. Now, if the dollar goes up, they'll rock this most likely to the downside. But what if the dollar goes down? Well, they may actually hang out here and do nothing and wait for the dollar to go up again. They might do that. All right. Or they may go ahead and follow it up. But if they do follow it up, as you can see, we don't have any room up there. We don't have 55 pips. So no matter what, our trade is only to the downside, only when they prove it. So your question is always this, all right? If they break into this area for that target, do I want to be in? And if the answer is yes, you put your entry order in and your entry order in. If your answer is no, I'll wait, then don't put the entry orders in. If your answer is I don't think it's going down, I think it's going up, then you certainly wouldn't put them to the downside. Does everybody understand that? You're in charge of this part of it, all right? The charts are going to give you clues, but you're in charge of making that decision, all right? Now, the chart is structured to do that, which is why I have it to the downside. Will it do it? I haven't got a clue in the world, and neither does anybody else. All right, so let's go back to the next one, which was the Aussie yen, also structured to go to the downside. All right, so here I've got it here. We're coming down here. Now, there's several options here. One of them is this could be a bull flag to go up. All right, so how do I say, oh, okay, are you really a bull flag? What does MACD say? MACD says, no, you are a seller. I've got a flag pattern already building here for the downside move right there, right? I do have, however, here's the conflict. I have an A, B, C, which says we're going up. Does anybody know what this is going to do? Anybody here know what it's going to do? No, we haven't a stinking clue, but we can define the trade based on the structure, which is to the downside. See that? All right. So one thing I need to get on here is a set of fibs. All right. I got a big fib here, but I need a set of fibs from here, from the swing high to the swing low. Back to, oh, got the wrong tool. Hold on just a minute. All right. Swing high, swing low, back to the swing high. Now, what that gives me is it gives me barriers inside the trade right there. Now, why do I want to do that? All right, so there's the whole trade down to this 2.618. You got a bottom right here, which is going to be over here. All right, so now I can define if it goes, and that's a big if it goes to the downside, can everybody see that's trade 1 and that's trade 2, holding all the way to the 2.618. There's the snowman. All right. How do I trade that? All right. Very simple. This is trade 1. This is trade 2. I trade 1 with 1/3 of my lots with 3 times the stop, whatever the technical stop is, which is right above here, 3 times that. 1, 2, 3. Right in this area, right in here. Right. Now, when the second trade goes in, it's 2/3 of my lots, and this trade, this stop has to be moved to break even or better. Now, from then on, I'm simply moving my stop when I hit a mathematical reason to do so. As I near the target, all right, which is the first target, this is the second, here's the first target, here's the second target, here's the third target. I move my stops within whatever, if I'm 8 pips away, all the stops are moved to 8 pips away, which is actually 16 pips, right? You say, well, why would you do that? Because I'm risking 8 pips here to make that. Is that a good risk and reward trade? That's a question. Is that a good risk and reward trade to hold that trade? Anybody there? Oh, thank you, Robert. Robert's awake. Good job. Thank you, Robert. All right. Peter's there. Okay, good. All right. So that's how you trade it. Don't make it complicated. Trade it the same way every single time. And once you learn a currency, all right, so okay, I got a job. I got to work every day and do the 8 hours a day for the man. All right. That means I only have the Asian market to work in. All right. Well, that's fine. What's wrong with that? Nothing. All right. Major in the yen crosses, euro yen, pound yen, Aussie yen, New Zealand yen, dollar yen. Major in those crosses, and what you'll find when you do your work is that 80% of the time, anything that happens in the Asian market will complete in the New York and the London. Oh, well, that means it's not going to complete while I'm awake. I got to go to bed. I got a job tomorrow. So what do? I find the target, I get myself to break even, and I let it go. That's all you do. Will you win? Yeah, most of the time you will, but not always. You won't always win because the dollar may flip halfway through your trade, and you're not here to manage it, right? That's okay if you can get to break even, right? All right, now that's the Aussie yen. The next one was the Euro Aussie, all right? So I got a lot of Aussies working tonight. Aussie dollar, all right? So now Euro Aussie, I actually sent a correction out on this, but it's actually okay now. All right, so I have it as a breakout, all right? So here it is, Euro Aussie. We got an entry price right here at 65.50, 65.50, right where we are right now. There it is. The target is right here. MACD says you're going down. You have a breakout, all right? Wow, Scott, you're right on the target. Look at that thing. It's happening. What do I got to have? I got to have a break, hook, and go. Do I have a break, hook, and go yet? No, I have a break. I don't have a hook. It's got to come back up, and then I can take the trade. All right, so there you go. Where do I put my stuff? My first and second trade. All right, fundy in a bit. Thank you. Yep. So we got a fundy, and this is if they're moving before the fundy. What they're doing, Chris? They're telegraphing. If they move before fundy, they're trying to tell everybody, this is the agenda. We are trying to go down. All right. Now, exactly right, Steve. All right. So there we go. All right. So what do we want to do? All right. Well, first of all, you're going to have to wait for the pullback here. It's going to have to pull back. This is the whole trade right here, right there. All right. So we got to get a pullback. Now, when we get a pullback, where's the second trade going to go? You see this bottom right here? Right there? Your second trade is right here. You can't put it in right now. Why can't I? Because I'm only 5 pips away from it. Once it pulls back up into here, if it does, that's a big question, then you can put this trade on. You can't put it on now because you could get wicked in before the hook and then the hook back up. You don't want to do that. Why do I want to do that? Because you're selling at the bottom. All right. When it pulls up right now, here's your risk. If you decide to take that here, here's your risk. All right. If you decide to take it up here, there's your risk. See the difference? What do I got to be? I got to be patient. I got to be patient. Yeah, but I want to just push the button, man. Don't push the button. Well, yeah, but it's going, man. If I don't get in right now, I'm gonna miss it. Let's go look at it. Good question, Larry. Let's go check it up. All right, let's go up to a higher chart. 60, will it show us? Let me go to a 240. All right, so let's look and see what they got. They put the money in they put the money in twice, Larry. All right, so let's look at this. So the money came in here and the money came in here. All right, this first money right here, that money right there came out there. This money came out right there. All right, so they can go anytime they want to, Larry. That's a great question, Larry. All right. So unless they get all the buys out, they're not going to go to the sells. All right. Once they get all the buys out, they can sell, but they can't sell until they get all the buys out. One of the biggest things traders miss is that right there. They don't look at the past. They don't even know to look for that. Wow. All right, so it's a good opportunity if it breaks. Now, it is breaking right now, but that doesn't mean much before fundy. So let's let it pull back up. If it pulls back up, wait, put your entry order below this bottom for 2 lots to the downside. Now, if you're a fast tracker, it's 3 lots, right? So here's the whole trade right here. But for a fast tracker, all right, this is trade 1, this is trade 2, and this is trade 3, all right? So how do they trade that? So a fast tracker will trade 1, 2, 3. 1/3 of their lots, 2/3 of their lots, and 3/3 of their lots down here. All right, that's how they'll trade it. Why can they do that? Because this profit is what they're risking for 3/3. That equals 2% of their account. This will equal another 2% of their account. Well, you're risking 4%. Yeah, I am, but I'm only risking 2% at a time. See that? All right. And that means I have 98%. If everything goes to hell in a handbasket, I have 98% of my money still in my account. All right. If you blow up your account, you're breaking this rule. And I'm not pointing any fingers because I've blown up multiple accounts. Too many for me to even count. I've blown them up. So I know what it's all about. All right. All right, it's continuing down. So they are really telegraphing right now. We don't want this trade now, but we want it after the announcement. All right, let's go back over here. And I got a pound New Zealand also. All right, so pound New Zealand, I got it to the downside. All right. And as you can see, they're just starting to make the move. Now they don't have an Aussie here, but they're correlated with the Aussie, so they follow the dollar, the Aussie dollar. All right. So here's what we got. We got an entry price at 206.96. We're at 206.87. All right. So we can't do it before that. All right. It's got to pull back up. But if it pulls back up, there's the trade. The limit is 20550, which is right here just below the ATR. All right, there you go. All right. What does MACD tell you? You're a seller. See that? This is price action. I'm not using a MACD, a slow stochastic. I don't have an RBI on here. I don't have an RSI on here. I don't have any of that crap. I'm looking for price action. What does that tell me? Where am I going to move my stop? At the 1270, at the 1.618. And when I get close to there, it's going to be a 1-to-1 risk to reward ratio. And I'm going to hold for the 2.618 fib below that. Everybody understand that. This is the way you need to think about trades. You don't need to think about trades like most retail traders. Oh man, there's my setup. I'm in. Where are you going? I don't know. Where are you going to maybe stop? Oh, I don't know. Where are you going to bail if it doesn't work? I don't know. That's the normal retail trader. We don't do any of that stuff. All right. If you're doing that, quit it. Quit it. You'll learn how to do it here, but quit it. That's all I can tell you. All right. All right. Anybody got any questions on those alerts? Anybody at all? Everybody good? Let me know. Thank you, JT. All right. So JT is with me. All right. Now, no matter what, you can't sell here because you got to have a pullback, but you do have a breakout. So that means you have permission to go to the 10-minute chart and watch it. All right. Watch for it to hook back up. Once it hooks back up, now you got to make a decision. Do I want to trade it before this announcement or not? No matter what, your entry order is below that 1.270 right down here, right there, for all the way down here. Fast tracker, one there and one there. All right. What tells you to do that? The chart. Well, Scott says to put it here. That doesn't mean squat. All right. What does the chart say? Where do you put it based on the chart? Not where Scott says it. All right. Where does the chart say to put it? Well, I don't have that line on there. Then you're not trading. You're a gambler. Don't be a gambler. Learn to be a trader. All right. Now, learning to be a trader is not a 3-day deal. It's not a 3-week deal. It's going to take a long time to be a trader. But that doesn't mean you can't have success. You can become world-class in 100 hours if you'll focus on one thing. All right. What do I want to focus on? What they do every day. What do they do every day? Well, if I look at the charts, I see they do things like this. They do tons of flags. They do pullbacks. Right? That's what I focus on because now I can make a living. All right. This may take off and go before an announcement. I'm not interested. But if it stalls out, pulls back up, which most likely will happen because they'll run out of participants because everybody knows there's an announcement tonight. All right. So there we go. Announcements in, an hour and a half. All right. So why are they doing this? It's a telegraph. All right. That's what they're doing. They're telegraphing their intentions to all traders who know what the heck they're doing. Retail traders have no clue about this. They break a barrier and open and close the candle on a 60-minute chart. All right. That's an hour. We're an hour and a half from the announcement. Would it be a good idea if the agenda was to go down to here, to the target? Would it be a good idea right now, an hour and a half before, to tell everybody the intention of the market so everybody knows if the announcement comes out right, we're doing that. Does that make sense? Does that make sense? Yes, no? Thank you, Frank. Thank you, Steve. Thank you, Daniel. All right, good. So we don't get snookered. We're not people who jump in because, oh, it's a bright red candle, man, I'm in. We don't do that stuff. We're price action traders. We're traders. We're not gamblers. We're traders. We understand all the things. You say, oh, man, I know nothing about telegraphs. Okay, now you do. All right. So now, how do I learn that? Go back and do 300 of them. Really? Yeah, that's how you learn it. You don't learn it because you sat there in a live room and somebody said that's a telegraph. You're not going to learn it that way. All right. So you'll find that, especially if you're new here, that I'm pretty doggone honest. And I tell you like it is. I don't tell you all the here's your Maserati you're going to get in the next 3 weeks. All right, because you aren't going to get a Maserati in 3 weeks. That's all there is to it. That's called marketing. That has nothing to do with trading. All right. So when you go to a site and they got a guy with a Maserati or whatever they got out there, Stingray, whatever. I bought this in 3 weeks from trading the Forex. You know you're at the wrong place because that doesn't happen. Pure and simple. Don't fall for marketing. Right. All right, let's take a look and see what else we got today. Let me go up here and get on the charts. I'm on the charts. Let me pull up something here. I went too far. Hold on. All right. So let me pull up the announcements. All right, that should be next on the schedule here. Let's pull up the PowerPoint once more time. Well, come on. It'll be like that. All right. Where are we at? Here we go. All right. So those of you I see alerts I've already sent. Here's the funny times to be flat. All right. This is the economic calendar. All right. So let me pull it up here. All right. Pull up the calendar. All right. So every over the weekend, I do this every weekend. Should you do it? Absolutely. You got to know when to be in the market and when to be out. Right. So this is Monday. We got a Aussie's RBA rate, which is their FOMC right there, and 11:30 they're going to have a press conference. So that makes it tough on the Aussie tonight. So the announcement, the alerts for the Aussie are for after the announcement. That's what they're for. Now, if you just go trade them and you don't know the announcements tonight, you go, well, you told me to trade it. No, I gave you the information in case that happens after the announcement. All right. Tomorrow we got Governor Macklem speaking on the Canadian. We don't trade the Canadian. No retail trader, in my opinion, should ever trade a Canadian dollar. And that's why we don't trade them. Why? All of my friends who are big traders all blew up their accounts trading the Canadian. Why did they do that? Because OPEC can make a decision in a minute. Oh, we're going to cut our output by 1,000 barrels a day. The Canadian dollar goes crazy. Doesn't matter what it's been doing technically. It will no longer be in effect. And you lose your shirt trading the Canadian dollar. So stay out of the Canadian dollar. All right. On Tuesday, tomorrow, we got New Zealand's unemployment change. So New Zealand will be the same as tomorrow, except it's unemployment change. It's their non-farm payroll. Nothing on Wednesday, as you can see. Thursday, we got unemployment claims on the dollar. Now, that'll be a big announcement right there. All right. So that could really rock the market right there. And then on Friday, which doesn't matter to you because it's Canadian and you don't trade on Friday anyway. By the way, if you're in here and you're new, you never trade on Friday. Never. Just close your charts up and close. Why? Because it's square up day. It's the day they get out of their trades. They're getting out of your trades and you're trying to get in one. What's wrong with this picture? Everything. All right. So Friday is not a day to trade. Monday is construction day, a tough day to trade. Tuesday, Wednesday, and Thursday are the days to trade. All right. Well, gosh, I thought I could make 100 pips a day every day. That's why I quit my job. You're in trouble because you only got 3 days, not 5. All right. All right. So that's the announcements for this week. All right. Now we had the next thing is the real estate of the week trade from last week. All right, that's what we'll be doing tonight. And let me pull it up here. All right, so we're going to look for it. But why do we do that? Because there are massive pips if it goes. You can see here. Here's Kay. Kay here tonight. Yeah, Kay's here tonight. I usually use her, and her total on this one on the GJ was 6,637 pips. That's not her record. Her record's over 8,000 pips. I just happen to use that screenshot. All right. So there you go. That's that. There are huge pips available if you execute. All right. So that's our job for the rest of tonight is to go back in and take a look at the real estate of the week. So what we do, I'm here to teach you how to find a swing trade. It's not important whether we find one tonight. It's important whether you find out how to find one. All right. If we find one and it goes, you're going to see traders making hundreds, maybe thousands of pips. But if it doesn't go, you won't. But that doesn't matter. It doesn't take what we're trying to teach you tonight away. We're trying to teach you how do I recognize one. All right. So the first thing we do is we go to our ATR. All right. And you say, well, I'm not using the ATR. Then you can't trade one of these. All right, the ATR gives you the statistical probability of how far the currency can move every day. We only care about the 14-day. We're looking for big numbers, okay? So we're going down here. These are all small. Ooh, there's the Euro Aussie at 111 pips. I'll make a note of that. I go down here. Here's the Euro Yen, 115 pips. Not too shabby. Here's the Euro New Zealand, 125 pips right there. And there's a pound Aussie for 118 pips right there. And we'll scroll a little lower here. And we got pound yen and we got pound New Zealand. All right. Pound yen, pound New Zealand. Now, we're going to work those up first. If we don't find anything, we'll go to the smaller ones. All right. But they're going to take longer because they only have low ATR. So we're looking for something that could go for a long way quickly. That's the purpose. All right. So we got them identified, and the first thing we do is we pull up the calculator, all right? Now, we got to go back to rudimentary math here, all right? So the first one we're going to look at is the GJ. We're going to work left to right, all right? Let me make sure that stays up here. Hold on. Right there, the calculator stays up. There we go. All right. So I'm going to look at the structure. I'm looking at structure. Where's the trade? I'm not looking for the trade. I'm looking for structure. Where could this go if it really goes down? Here's the day chart bottom, all right? It could go all the way down to here. Hey, can it do that? Well, you just watch here. It went all the way up to there. Can it do that? Yeah. It could go all the way up there. Well, wait a minute. How did they make that happen? They did a bear flag. They did a flag. And they did another bear flag. What do they do? Three things. Is that rocket science? Two bear flags and a rectangle, and they went up and down for 188 down to 1,000 pips. What do they do there? Three things. That's it. A pullback, a flag, and a pullback. Gee, and they went 1,000 pips. All right. Wow. Maybe what if they did that over here? Well, I'd like to be in it if they do that over here. All right. So that's what we're going to try to figure out. I'm going to take this fib off for now. I'm just trying to clean up the chart so we get as much wide open space as I'm going to take off because we already got the breakout right there. You can see we got a channel, but and that channel is proven, but most likely that is not the channel. Most likely the channel, hold on, is here. Get rid of that. Just take it off. All right, so most likely, come on, there we go. That's the channel. Now I can't prove that yet. I can prove this other one here, but that's most likely the top of the channel to the downside. All right. Now you can see there's a clear lane to the downside. All I got to do is I got to subtract where I am, 186.36, 186.36, subtract the bottom down here, which is at 178.22. All right. So there's 814 pips to the downside. Would anybody like to make 814 pips to the downside? I'm sure the answer is yes. All right. All right. So yeah, there we go. All right. Let's go check the EJ. What do we got here? All right. EJ to the downside. We go up to a 240 chart. We may have to go higher, but wherever we got to go higher. This was the real estate of the week last week. And this is all we got of it. We figured it out up here. We did get this little bit here, not all of it. This might be the continuation, all right? Where might it go? All right. And you can see the bottom is down here at 150, 140. How do I find that? Let me tell you how to do it. I go up here and I find a bottom that proves that that's it. There's a support here, resistance here. That's really all I need. But if you won't go back in the past, we'll probably find some more. All right, maybe not. All right. Nope, nothing back there. Okay, that's what I need. That's the bottom. This is the top. You can see it right there. All right, it's not rocket science. All right, I'm going to take these fibs off just to clean it up so it makes it easier for us to see. I'm going to take this off for now. I'll put it back on later. So now we see the channel to the downside. You can see they've already proven the heart line. Well, I'm on MT4. I don't have a heart line. Then you're guessing. You are not trading. You are gambling. If you don't have a heart line, you can't prove this outer channel wall. If it proves the heart line, you know that's real. If it can't prove the heart line, it's not real till you find it. I don't have a heart line. Then you don't know. You don't know. All right. You're gambling. You're not trading. You're a gambler. Now, I'm not trying to be mean here. I'm just making the point. And this could actually be quite a bit bigger. And I believe it is. I'm going to pull it down to here. And voila, it proves that the heart line there. See how it did that? I saw it and my left brain said, hey, Scott, I think you might want to adjust that because my left brain has reticular cognition. I've done tens of thousands of channels. Because I've done tens of thousands of channels, my left brain says, you don't have it right. Go see if that's it. And sure enough, that's it. So it's a bigger channel than I even had in the beginning, right? All right, so now it's simply a matter of how far do I got to the bottom, all right? I'm currently at 159.64, and the bottom is at 151.41, 151.40, sorry. All right, there we go. 824 pips to the downside. Gosh, that seems like a lot of pips. Can they do that? Yeah. All you got to do is look back here. That's 824 pips to the top side. What do they do over here? Here's what they did. All right. How did they do it? They did a bull flag, another bull flag, and they did another bull flag, and then a flag right here. That's what they did. 3 bull flags and 1 flag. Should I learn pullbacks? Yes. Should I learn flags? Yes. Could I have made all of those on a break of the bull flag? Yes. Could I have made that? Yes. Could I have made that? Could I have made that? Yes, I could have. If I'm world class in those 2 things. So what do I want to learn? Those 2 things. Learn to trade pullbacks and rectangles. Wow. How long will that take me? 100 hours. 100 hours. Really? I can be world class. That's right. All right, so we got 824 there. Let's go take a look at the Euro Aussie. What we're trying to do now is find the biggest opportunity. We're not trying to find a trade. We're not doing any of that. We're going through the currencies that might possibly give us a big return for our investment. And you can see the day chart bottom is down here. There's the top. All right, do we break down? If we break up, we don't have a real estate of the week trade. As you can see, it's only 200 pips. But to the downside, it's pretty big. We're currently at 65.44. We subtract 58.45. And what do we got? 519 pips. All right. So right now the yen crosses are winning. All right. All right. We go over to the pound Aussie. All right. Here we go. We're up here. Let's go to the 240. Take a look at it. Where is the bottom if it goes down? All the way down here. All right, so you got to know this. That's why you find the day chart bottom, the day chart top. So now you know where you are, and you know what the opportunity is, which is huge. All right, I'm currently at 93.19, 93.19. I subtract the bottom down here, which is at 85.75. And what do we got? 744 pips. So right now we know that we're not going to trade the Euro Aussie, because the pound Aussie is 744 pips. All right, over to the Euro New Zealand. All right, Euro New Zealand, what do we got? Got a breakout. That's nice. Where are we going? Only to the range bottom. Where is the bottom? Right here, all the way down here. Let's see if there's even any room. We're at 77.15. We subtract the day chart bottom, 74.45. 74.45 equals 270 pips to the downside. That didn't work. So there's nothing there. walk away from it. Find the pound New Zealand. All right. Is that correct? Was that correct? 270 bit looks bigger than it. No, that's let me see here. 1, 2, 3, 4, 5, 6, 7, 8, 9. Yeah, that's all it is. 270. Okay. All right. Pound New Zealand. All right. Pound New Zealand breaking. We're not worried about this day chart. That's tonight's trade. Maybe we go up to 240 and see where is the bottom of this one, all the way down here. Can you see why you find the bottom and the top? All right, you can't do a real estate of the week trade without knowing where the day chart bottom is. Well, gosh, they did. They went. Did they do it? Yeah, they did it up. They did it up with, except for maybe 20 pips. Can they do it down? Sure, maybe less 20 pips. What can I tell you? All right. So we're currently at 0685, 0685. Subtract 010. 0685 minus 0104 equals 208 pips. Is that right? That can't be right. Hold on. Let me just put it all in. 20685 subtract 20104. That'll be better. Yeah, 581 pips. There we go. All right. So based on that, the two best currencies are the EJ and the GJ. And after that, it's the pound Aussie. All right. So now we go to work. We've narrowed it down to three currencies. The biggest opportunities with the biggest ATR, that means they can go there the fastest. That's what we want. We don't want slow currencies, because to stay in a trade for days and weeks isn't what we want to do. We want to stay in as long as it gives us a trade. All right, so let's work it up. So first thing we got to do is find the wave structure. All right, so here we are. What is the wave structure? You got a 1 and a 2. That means you're in a 3 wave to the downside, then you have a 4 and a 5 to the target. All right. So we're in a 2 wave here. Finish the 2 wave, we're in a 3 wave. So what do? Well, we find the targets for the wave. All right. So how do we do that? We go to the top of the 2 wave. We find the HSI, which measures Elliott wave targets. We go up here. This is why you can't do it on MT4. Grab it up there. We go, we're a seller right there, and we're going to change the color to a 3 wave, which is yellow for me. So I always know I'm in a 3rd wave. Wow. Look at what we got. This is called confluence. When you've got HSI, which is the LA wave targets, and the fib right there, that's a monster number right there. Right. So now we can see how to trade this thing. Right. Well, you only got a couple of things. Here's the trade. It's even off the charts. Let me go up, get rid of that here, and pull this up so I can get it, so I can see it. There we go. All right. So here's the whole opportunity. If it goes, will it go? I don't know if it'll go. And you can see you need to hold for the S7, which is just below that day chart. All right. That's the Elliott wave target. When it gets 5 waves in, that'll be the Elliott wave target. Now, you can clearly see that this is a wide open space. This is a wide open space. This is a wide open space with 2 of them in there. This is a wide open space with 1, 2, 3, 4, 5, 6, 7, 8 T30s in there. All right. Now, if you've never traded one of these before, all right, what do I do? You put the entry order here. You put the entry order here. You put the entry order here. And you put the entry order here, for 4 positions to the downside. When do you put them in? Kay will tell us. Now. Here you go. Kay is the reigning queen of all this. So, now you put them in now. Now, if that happens, your first trade is going to go 800 pips. The second trade is going to go 750. The third trade is going to go 600 pips. And the last trade is going to go 400 pips. Add that up. That's thousands of pips. All right. Now, if you're a fast tracker, you're going to add a position on all these T30s, all these T30s, all these T30s, all these T30s. You could have as many as 20 positions to the downside. All right. So there you go. That's a big trade. That's a really, really big trade right there for a bunch of money. How do I trade it? right? You're going to take trade one on the breakout here, right there. When you get trade one, that trade does not come off till here. What? Nope. All right, it moves down here. All right, you get your entry orders in here. It moves down here and it says we're going to continue. You hold it. And right down here, it may say we're going to bounce or what. If it says we're going to bounce like this, you take these intraday trades, you take them off and you put them in the bank. But you hold trade one at break even. If it's going to go down, if it is, and that's a big if it's going to go down, they're going to have to make lower highs, which means it's never going to come back to that break-even trade. If it's not, and it comes back to the break-even trade and takes you out for break-even, it wasn't going to happen anyway. What's my risk? Zero, right? Now, why do I want to do that? I want to do that because this. If I get these trades on and it works and I decide, okay, it's coming down here and now it's going to pull back up and I take these positions off, in order to continue, it's going to make a lower high. So when it makes the turn up here to the downside, I can add a position here on a market order, leaving all my entry orders in. How much risk do I have in this trade? Absolutely nothing. Why don't I have any risk? Because the profit on trade one is going to cover the risk of trade 2, 3, 4, 5, 6, and all the way down to here. Gosh, I would really like to trade riskless with no risk at all. This is how you do it. This is how you do it, folks. All right. That's on the board for sure. EJ is on the board. I mean, GJ is on the board. All right. All right, next one that's a big one is the EJ. All right, now they run together. So if you want to trade them, don't trade one or the other, but don't trade both of them. All right, this was our real estate of the week last week too. All right, so it did. See, we got this last week. Haven't got anything of it now. Now we have a pullback. We got lower highs. 1, 2, 3. What's the wave structure? The wave structure is right here, a 1 and a 2. All right, now here's what entices me about this. If this is the wave structure, wave 3 can never be the shortest trade. It can never be the shortest trade. Look how big wave 1 is. It's huge. Where is the target for wave 3? It doesn't matter where you're at. As long as you can see it, Stephen. It doesn't matter. If you can see it on a 60, do it on a 60. You know, I've come up here. I'm on a daily. I'll take it down to a 240. That's why we got a 360 in there. See? Now, you know, see, it's a little harder to see here. All right. But you can see on the daily, you see, I'm in a third wave here. See, a 1, 2, I'm in a third wave in a day chart world to the downside. When I go to the 240, I no longer see that. Right. So it's all about getting it to the whatever time compression shows it to you clearly. There's not a rule for it. Normally it's the 240. But as you saw here in the daily, I'm glad I went to the daily because I now know I'm in a third wave to the downside here. All right. Now, that's the third wave in a day chart. What am I in on this chart? Okay. On this chart, I'm in a 1, 2, 3, 4. No, I'm not doing that because here's one wave and wave 4 can't go into 1. So I'm not trending on the 240. All right. I am trending in the day chart, but I'm not trending here. I'm doing a range. Now, what does that do? That says we may only do the range. That's what it tells you. All right. It's information. It's nothing more than information. Yes, I have an outside target all the way down here. But can I see the range? I can see the range now from here down to here. All right. Now I'm going to go down to the 240. See, this is why you need multiple time compressions and you need to work them. Now you can see that by rights, you should only target the range bottom. Does that make sense, Stephen? Does that make sense? Question for you. Stephen, I'm not picking on Stephen, by the way. I'm not picking on him at all. He asked the question. Would it be smart for me to say, I'm not going to the day chart bottom on this one. I'm only going to the range bottom. Well, okay, but that's good. See how we got there? You got there first. Good job, Stephen. See that? Nice work. See that? You go, hey, Wow, I'm gonna stand up and say how pretty good, Scott, Stephen. I did pretty good on this one. So on this one, I would not target the day chart bottom because I'm in a range that's clearly right there. All right. So, from here down here, there's another 250 pips. So from here now, I'm gonna refigure this one. All right. I'm currently at 159.64. I'm going to subtract the range bottom at 155 even. 155 even. And that's only 464 pips. So the chart, the EJ said, I'm not a real estate of the week trade. Why is that important? Get this, folks. All right. It took itself out. I didn't make the decision to take it out. It took itself out. Buy. All right. I got a better opportunity on the pound Aussie because I got 744 pips over there. See? So this is still a great intraday trade, but it is not a real estate of the week trade. We're looking for 6, 7, 800 pips. All right. This is only 500 something. All right. I'm still going to put the HSI on from the top, and it's a third wave in the day chart world. So I color it yellow. All right. And wow, they know that number. They sure know that number. They sure know that number. They sure know that number. I wonder if they know that number. What do you think? I don't know, Scott. You're so lucky. They knew this number. They knew this number. They knew this number. They knew this number to the pip. Do they know that one? They do. See? There's the opportunity. It's not a real estate of the month trade, a week trade, I should say, but it's a heck of a great intraday trade right there. Would everybody agree that's a great intraday trade right there? Might take 2 days. That's fine with me. How long can you stay in a trade that goes your way? As long as it keeps going your way. All right. What if it keeps going your way and you click out for 10 pips? Who lost those pips? You did. Why? Because you're not a trader. You're gambling. Don't gamble. Learn to trade. All right. There it is. Big opportunity intraday, but not a real estate of the week trade. Let's go to pound Aussie. All right. Pound Aussie at the very top, right up there. Wow. All right. Let's go up to a day chart and see where it is. It's still here. Okay. So there we go. All right. So you see, we're at a top trying to come down. All right. We got 744 pips to that line right down there. All right. Now you can see we have not done anything except the first move to the downside. All right. Fast trackers, you already know it's a BP. All right. I'm going to put the HSI on in case it trends. I will know where the L8 waves are. All right. There it is. All right. So now you can see, ooh, that's a big line right there. All right. So now you see the wide open spaces. See, what you got to find is where are the wide open spaces? If I don't have wide open spaces, I don't have an opportunity. Wide open spaces. Can I identify them? Yes, because the chart's going to show you where they are. There they are. There's 1, there's 2, there's 3, there's 4. All right, entry orders. Where do I put them? 1 there, 1 there, 1 there, 1 there. When do I put them in? Kay will tell you now. Now. You don't wait. You put them in. All right. So people say, how do I know to do that? Okay. The question then it becomes, if it breaks into this area, do I want to be in? If the answer is yes, you place an entry order. Well, what if it breaks in this area right here? Do I want to be in? If the answer is yes, you put it in. If it breaks in this area, do I want to be in? If the answer is yes, you put it in. If that you break in here, do I want to be in there? Yes, I do. All right. So it's a very simple question, and you're in charge of answering it. All right. Can I get a channel on here? I can start one, but it's probably not going to be what it actually is. All right. So there's a start. Now I can't prove it because I can't prove the heart line. So it's a working channel until they prove it. Now, should they come down here and bounce like this, right on that, I keep it. What if they come down here and go like this and bounce up? Then I got to go find the next one down here. All right. So I'm waiting for that information, but I have a start already. All right. So remember, the key to this trade, the key to the real of any swing trade is trade one. When is trade one likely to happen? Tonight. Wow. Do I want to miss that? No, I don't. All right. If it's going to trend, it's going to put a lower high in, which means my only job is to get trade one on a break hook and go here to break even. When will I move that stop? I'll probably not, and me personally, now you might move it sooner than that, but me, I probably wouldn't move it to profit until we hit here. I let it do all its gyrations in here like this, and when it moves here, I'll take the break-even trade and move it up here, down here as it breaks into this area. I'll move it here. Now, I will have guaranteed this profit. You don't want to be in a hurry to move your stops, especially on trade one, all right? But you're going to trade this intraday, all right? So assuming this market, and we don't know what it's going to do, assuming the currency break hooks and goes here and goes to target. This is down here tonight. If it goes to here tonight, right here, and it doesn't bounce, which would be the second wave, right? And it doesn't bounce. If it bounces up here, then I'll take the HSI off of here and I'll move it over to here and find the targets for the next move to the downside, all right? But but if it does that and I'm at break even, it's going to be tight here, as you can see. But if they broke through in here and then pulled it back up, it's a no-brainer, right? So trade one stays on all the way to the bottom, all right? So don't be in a hurry to make to move that stop because you got a long way down here. Now, if you trade that and your entry orders enter, you've got 5 positions to the downside, with the biggest one being 744 pips. The second one might be 680 pips. The next one might be 640. The next one might be 600 pips. See what I'm saying? How many pips are we talking about? We're talking thousands of pips, folks. We're not talking about 10, 12, 15. Well, yeah, but can it really do that? Well, I don't know. What do you think? Do you think it can do that? You think maybe they can go from the bottom to the top? Yeah, they can sure do that. That was a real estate of the week. Yes, it can. All right. How did they do it? All right. Well, how did they do that? Well, I'll show you what they did. They did rocket science. They came up, they had one little bear flag, then they did a flag right here. They did a break hook and go, another flag. What did they do? One bear flag and 2 flags for 750 pips. Wow. What if I was a world-class trader in flags, which are pullbacks? What if I was a world-class trader in rectangles? Could I have made all those pips? Yes, you could have. Can it do it over here? Well, it's already told you we can do it. We can go from the bottom to the top. Can they go from the top to the bottom? I think they could probably do that. See that? All right. So that's how you trade them. That's how you find them. All right. Yeah, just look at what it did in the past. All right. What did they do over here? Oh my gosh, look at they did all that. Gee, how about that big sideways move? That's fun. No. How about this one? Oh, I guess they can do that. Oh, yeah, I guess they can do that. See? What happens is we're myopic. We're so used to trading for 5, 8, 10 pips, we don't know there's 800 pips here. And we don't even know how to trade it. Now you do, all right? So the purpose here, yes, we found a real estate of the way you trade. Let me put it up here. We have found 2 of them. That's what we look for. Real estate of the week down. All right, put it up there. All right. We found them. Do I have entry orders in? Yes, I put the entry order. Now you're going to have to do this on your chart so you know where the numbers are. You know where the numbers are. You're going to have to do it yourself. Well, why don't you just tell me where the numbers are? Then I'm giving you a fish. I'm not here to give you a fish. I'm here to show you how to find the fish. All right. Anybody who's ever fished with a guide knows that the guide knows where the fish are. That's why you hire him, because he knows where the fish are, and you're going to pay him $400 to take you out on a boat. You want to bring some fish back. They are the most expensive fish in the world, but you want to bring them back. That's why you do that. All right. Well, you need to be the guide here. I'm the guide, showed you where they are. Now you got to find those levels. Well, I don't have an HSI. Well, yeah, that's going to create a problem. It's not a big problem, but it's going to create a problem. All right. Well, I don't have the HSI. Okay. Could I do this? Could I trade this one right here? I'm on MT4. I'm on TradingView. Could I trade this? Could I trade this? Could I trade this? And could I trade this without an HSI? Duh. Yes, I could. All right. Now, you can quickly see that what would happen here is if I come down here and I hit this, Most likely that's where the bounce is going to come so that I can do this. And then there'll be a bounce here, and that'll give me the ability to do that. What is that? A wave structure. 1, 2, 3, 4, 5. All right. Now here's your hardest thing. When this starts pulling back and you exit your positions intraday, when this starts pulling back, you pop a fib and you go, wow, where's the 50% fib? Oh, it's 180 pips against me. 180 pips. What is your right brain going to tell you to do? Man, you got 180 pips and you're break even on trade one. Take it off. Put it in the bank. Don't let it go back 180 pips. That's what your brain will tell you. If you do that, you now start all over here. If you don't do that, you have a free trade here, a free trade here, a free trade here, a free trade here, and that's it. Then they pull back again. All right, now this is going to go 150 pips. Do I let it go back 150 pips? Yes. I only have 1/3 of my lots in there. Now, if it turns here, what have I got? I got a free trade here, I got a free trade here, I got a free trade here, and I got a free trade to the bottom with no risk. What should I do? Don't take trade one off. If you do, you start all over, all over. And at the first time you do it, it's going to freak you out. All of you who have traded a real estate of the week trade, we have lots of traders in here who've done it. How did it feel when that thing was going back and you knew it was going back 120, 140, 150 pips? What did your brain tell you? Let me just give you a simple yes or no. Did it freak you out? Yes or no? Yes, Larry said, yeah, it did. Find the barf bag. Yeah, exactly right, Joe. But if you execute, what's the key to being a trader? Execute. You execute. If you execute and it goes your way, there's no guarantee it's going your way. But if you execute and it goes your way, all the next trades are free. They have no risk. Wow, well, I got 5 positions built to the downside, and there's no risk on them. Wow, wouldn't that be nice? Where's my risk? Trade one. Number one risk is trade one. That's it. You execute on trade one, and you commit to that bottom down here, and you get pullbacks and all that. All the trades you make after that have no risk at all. How would you like to trade riskless? I'd like to do that. I'd like to put my money at risk and have no risk, okay? Put 1/3 of your lots at risk right here and do what I'm telling you. And if it goes to target, that's a big if. I don't know if it's going to go. If it goes, you'll make a ton of pips, more than you've ever had in your whole life. Well, yeah, but I don't know if it can do that. Duh, look over here. Can it do that? Yeah. How about down here? Can it do that? Yeah, it looks like it can do that. See, the currencies can do it. Can you trade it? That's the key. All righty, everybody. Anybody got any questions? Any question? Hey, whoever's raising your hand, you don't need to raise your hand. You just need to type it in there. Let me see. Because I don't look at all that stuff. I don't see where they went. Okay. I don't know what raising the hands was. So a couple of people were raising their hands. All right. All you got to do is type in. All right. I'll answer your question. If I know it, I will tell you. If I don't know it, I'll be honest. I'll say, I don't know. I don't know. I don't know everything. I know a lot. I've been trading 23 years. My job is to take what I've learned in 23 years and pass it to you. All right. That's my job. But I don't know everything. And I will tell you if I don't know, I don't know. Now you can see right here, you are attempting a break here on this pound Aussie. Now remember, there's an Aussie announcement tonight. Remember, they've already telegraphed on other charts that they're trying to make this happen, which means tonight may be the night when this happens. And it starts. When will it finish? 2 or 3 days from now. All right. That's the way real estate of the week's trades happen. All right. You say, well, how do you know that? Oh, because you go in the past. Right over here is the 27th day of December. This one right here is the 17th day of January. So what did it take? That took 3 weeks to do it. All right. Now we're not looking for that. We're hoping to be done with this in a week or less, but it may take that long. How long can you stay in a trade that's going your way? As long as it keeps going your way. Yeah, but I've never traded for that many pips. Well, it's time you do, because that's the secret of trading, is to stay in until it's over. Don't limit this is why do they call it a limit? This trade may go 744 pips, but please limit mine to 10. That's what you do when you put a limit in. All right, I'm going to put a 10 pips limit on here, and if I make 10 pips, I'm happy. Wow. And it went 744 pips and you lost it all. You missed it all. Why? Because I didn't know how to trade it. Well, now you know how. Will you learn it on the first one? Probably not. Will you learn it if you practice them and you're going in charts and you go over here? Well, let's look at that pound out New Zealand real quick here. All right, pound New Zealand, not very big, but I can see I got a real estate of the week trade. It's not as big as the pound yen. It's not as big as the pound New Zealand, but it's still a real estate of the week trade. Can you see it right there? All right, what do I got to do? I got to get some fibs on here. Swing high, swing low to swing high. There we go. Now I got fibs down here. All right, I'm in a third wave. Here's a 1, 2, 3 wave. We're in a third wave. Put the third wave on with the HSI. I don't have that. Okay, well, just put the Fibonacci sequence on. That's what it is. Now I can see them. Where's the wide open space? Here's the wide open space right here. Trade 1 is here tonight. Here's trade 2. Here's trade 3. Here's trade 4. Here's trade 5. Could that be a real estate of the week trade? Yes. Is it as big as a GJ? No, that's why we didn't pick it. But it still could be a real estate of the week trade. If I can learn to do this, could I max these big numbers out? Could I grab hundreds and thousands of pips? Yes. Is it hard? No. Is it a mentally challenging deal? It's absolutely the most probably mentally challenging thing you've ever done in your life. Right? Yeah, it's GJ and GA. You're correct. For Abdul, Larry, thank you. Yeah. So thanks, Larry, for grabbing that. All right, everybody. That should give you plenty to think about tonight. You got a lot of work to do, which is to find those levels, put those entry orders in, get your fibs on there, get your targets on there, do all of that. That's what you got to do after we get done with this class. Put your entry orders in now, not tomorrow, not the next day. It'll be gone by then. You put them in now. All right. Now, there may be times when you got to pull them off. All right. You see that, man, it's going, but it's the end of the session and they're going to pop down in here and then the session is over. Then you take that one off. You're in charge of that. It's not going to work right there. That's where I got it now. But when the real estate of the day comes in and says, by the way, we're going to hit this target, but it's 11 o'clock in the morning. Oh, okay. They're not going to go down here. That's right. They're going to pull back. What do? I don't execute that trade. I take it off. That's your job. All right? Be a trader. Don't be a gambler. Be a trader. I can get a channel on here, so I'm going to go ahead and do that. Well, I can. It's pretty shallow, but Heartline's proven. Heartline's proven. All right? So there you go. Can I get down here based on the channel? Absolutely. All right? So the goal tonight, yes, we're trying to find a real estate of the week. And at the end of this week, if it goes, you're going to see traders who made thousands of pips. Not 10 pips, not 20, thousands of pips, right? And you know how to do it right now. If you didn't trade it, it's your own fault. It's your own. If it goes, what if it doesn't go? Then it doesn't go. I can't make it do it. I have no control over the market. Anything I don't have any control over, I don't lose any sleep over. Something I did wrong, no, that's something to lose sleep over. I gotta address that mistake and quit it. Stop it. Right. All right, everybody. I'll see you in the morning. Be careful. I'll talk to you soon. Have a great night. You bet, everybody. We'll see you soon.